Crude oil prices surged above $100 a barrel as the Iran war disrupted production and shipping in West Asia. Brent crude rose above $114 on March 9th, its highest level since 2022. The last time U.S. crude futures traded above $100 was on June 30th, 2022, when prices reached $105.76. Brent crude last crossed $104 on July 29, 2022. The surge comes as the expanding U.S.-Israeli war with Iran has raised fears of tighter supply and prolonged disruption to global oil shipments. A major concern is the Strait of Hormuz, a key route for global energy supplies. Around 15 million barrels of crude, about 20% of the world's oil, normally pass through the strait each day. Fears of Iranian missile and drone attacks have sharply reduced tanker movement through the route, disrupting shipments from the Persian Gulf. Top exporter Saudi Arabia has increased shipments through the Red Sea, but the volumes remain far from enough to offset the shortfall from the crisis-hit Strait of Hormuz, according to shipping data. Over the weekend, Israeli strikes targeted oil depots and a petroleum transfer terminal in Tehran. Israel said the sites were used by Iran's military to supply fuel for missile launches, raising concerns that energy infrastructure could become a broader target in the conflict. Export disruptions have already begun affecting regional production. Iraq, Kuwait, and the UAE have cut output as storage tanks fill up amid reduced exports. Oil prices had already surged last week as the war entered its second week. U.S. crude rose 36%, while Brent gained 28% over the week. The surge also rattled Asian share markets. Japan's Nikkei index fell more than 5% in early trade on March 9th, while South Korea's Kospi dropped about 5.7%. Hong Kong's Hang Seng index declined about 2.6%. Analysts warn the war could leave consumers and businesses worldwide facing weeks or even months of higher fuel prices, even if the week-old conflict ends quickly, as suppliers grapple with damaged facilities, disrupted logistics, and heightened risks to shipping. Iran exports about 1.6 million barrels of oil a day, most of it to China. Any disruption to those supplies could further tighten global markets. India's financial markets have also experienced a significant downturn, raising concerns about renewed inflationary pressures and putting additional strain on the rupee. Analysts say the decision by the US to allow India to continue importing Russian oil for 30 days could help cushion the impact of rising prices and possible delays in shipments to import-dependent India. However, government sources said Russian crude may no longer be available at discounted rates, with China also competing for supplies. Reacting to the surge in prices, US President Donald Trump said the short-term increase was a very small price to pay for USA, world, and peace.